Okay, let's try again. Good evening to everybody. Welcome. Ask your questions. Let's see what we can help you with. In the meantime, while we wait for everybody, let's see what interesting names we have tonight, like Wolfie. Good evening, Wolfie and Charmaine and John TK. I'm sure I've seen you from before, John TK. Big Mike. Good evening. Good evening. Buchla Lompanza. I hope I pronounced that right. Good evening. Majorsbokkie. Very interesting name. And Elo and Ralph and Sfiso and Titi and Bakakuya. Good evening, folks. Ask your questions. It is Thursday night. TikTok Live Q&As. You ask, I try and answer. Let's see if I can be of help to you tonight. Hello Enrico, good evening Princess Matlachamo. Good evening folks. So please go ahead and ask your questions and I'll see if I can answer. Good evening Divan and Joseph. Mikhail Besainote. Nonjabula. Nonjabula is a name that I had for a Sanlam consultant of us. We had a Sanlam consultant whose name was Nonjabula. I'll be very surprised if it's the same person. So C4, good evening. Market Kings. Good evening, Market Kings. What are you kings in? What type of market are you kings in? Anton Innocentia is with us tonight, and Rennie. And Sweet Soul is joining us, and Zips, Tembamag, Rodriguez. Good evening, folks. Let's see who's going to pop in with the first question for the evening. Megan and Keenan, what is the chance that two people with such close names will join right after each other? That is amazing. Megan and Keenan, and Sylvie and Dragon. Dragon 007. So that is definitely not James Bond 007. King M, Lovemore. Really such interesting names that people use for their TikTok accounts. Phyllis, good evening. Tundi, how's it? Hatsi. Ronaldo Key. Jameson Productions. Ntate, Andrew Motza. Good evening, folks. Come. I'm sure one of you must have some question for me tonight. Or is it going to be my off night tonight? Am I going to get one of those off nights where I can go and actually get into bed early? Jameson Productions, good evening sir, good evening Jameson Productions. What do you guys produce if you are Jameson Productions? What do you produce? Goeienaand Piet, hoe gaan het? Welkom hierso. Enige vrae gooi en dan kyk ons of ons kan antwoord. Champion has joined us, Arnie has joined us. Good evening folks. Hello Charlene. King M, good evening to you as well. Billy, there we go. I made mistakes by withdrawing from two parts. You warned us. Oh no, Billy, why did you make the mistake? Billy, that was not a mistake. It was a choice. Okay? The mistake was that you didn't listen. The choice was that you took money. So, do you want to fix it up? If you want to fix it up, then start paying extra into your retirement pot or your retirement annuity. Doesn't matter if you took it from a retirement annuity, pension fund or provident fund, start paying money back. Okay, so depending on how long you have until retirement, one can actually go and do a calculation to say, listen here, because you are 20 years away from retirement, you need to put in 100 Rand a month extra, and this will catch up what I've withdrawn. But obviously it will always be better to actually invest more than what you just need to do. So don't stress too much if you've made a mistake. Just don't do it again and start putting some extra again. Okay. Brett sê, ek lees hulle wil nou die 2 pot oop maak. Wat dink jy rondom dit? Brett, die 2 pot is lankal oop. 2 pot has been open since September 2024. So I don't know exactly what you mean with regards to opening it up. The fact of the matter is that they do stop withdrawals from the 2-pot system right at the end of the financial year, and then they open it up a few days into the new financial year, purely for the systems to be updated and so on. But no, the 2-pot system is open. Unfortunately, it's open and people can draw from it. What do I think about it? Exactly what I've always thought about it. I think the 2-pot system is not a good system, and I seriously advise people not to withdraw money from their 2-pot system and their savings. They are seriously gonna, what's the word? They're gonna be very unhappy with themselves. Let's put it that way. They're gonna be very unhappy with themselves in years to come when they realize what the impact was of the savings that they withdrawn from their pension fund monies. Billy says, I'm 35 years from retirement, sir. Will not do again. Good, Billy, good. And Billy, once again, don't be too harsh on yourself, okay? If you're 35 years away from retirement, you've got time to fix it up. And we all make these mistakes. And just to give you an idea, Billy, I myself made that mistake when I was younger. I started working in the bank many years ago. And then when I left the bank, I withdrew my pension money instead of putting it into a preservation fund because I was very young and very stupid. And I did not realize that there were things like preservation funds, and I did not realize how much I would have to invest over the years to catch up with what I've withdrawn. So I, your financial advisor that keep on telling you not to do certain stuff, I have done the same. I've made the same mistakes. And it's because I made the same mistakes and because I have seen how it has impacted me and how hard I had to work to catch up. That's why I can sit here on Thursday nights and during the week on my videos and tell people don't do it. It's not a good idea because I have first-hand knowledge. So don't worry about it too much, Billy. With 35 years left, you've got plenty of time to catch up. Literally go to your pension company, your pension fund, and say to them, listen, I want to just put away an extra 100 Rand a month. And you will catch up, especially if only withdrawn once, okay? Karabo Vincent. Corey, what happens to my vested pot when I retire or choose to resign? Karabo, I try not to get too technical with the 2-pot system, okay? And the reason why I try not to get too technical is because the 2-pot system actually consists out of 4 different pots. So basically your vested pot is the funds that was invested into your pension fund pre-September 2024. When you resign, the best thing you can do with all of your pension money, okay, which includes your vested pot, is to transfer it to a preservation fund so that it's preserved for your retirement and it keeps on growing. But if you choose to withdraw it, you can unfortunately do so. Legislation allows you to do it, but don't. The problem with this new 2-pot system, it becomes too technical and people don't understand that at the end of the day, you've effectively got a savings portion, a retirement portion, and a vested pot portion. But all 3 of those together is your pension fund as it's always been. And if you don't make any withdrawals, if you don't make the mistakes that I've just spoken about and said that I've done in my life, if you don't make those mistakes and you just transfer your money to a preservation fund, then you will never have to worry about what happens to your vested pot, your retirement pot, or your savings pot. When you get to retirement, you're going to have the option to withdraw 1/3 in cash and 2/3 can be transferred into a income product. So just do that, okay? So Karabo Vincent, I really hope that you have no intention of drawing money out of it. It's just, man, it's not good. Pete says, can you get a monthly payout from a preservation fund? No, Pete, you can't. So your preservation fund, okay, the way that you should see it is a preservation fund is actually the pension or provident fund that you had with an employer. You still have that same pension or provident fund, just not with your employer anymore, and you're not contributing to it anymore. That's the only thing. This money keeps on growing, and then when you get to retirement, because it is still your pension or your provident fund, you now at retirement have to go and choose how you want to receive an income. And at that point, you have to convert the money from the preservation fund into a life or living annuity or a combination of life and living annuities. Of course, then you also still have the option to withdraw 1/3 or not, or a portion not. But yes, the bottom line is your preservation fund is effectively your old pension or provident fund, but without you contributing anymore. And so you cannot withdraw from the preservation fund. You're going to have to convert it from a preservation fund into an income fund. Okay, Peter, I hope that helps, mate. Oh. Breeds, hang on a second, Breeds says, ek lees dat wil 2 pot oopmaak, wat denk jy rondom dit? En dan sê jy, ek bedoel, lock savings. Breeds, to be honest with you, I have not read that. I would really like to know where you read it. I would like to go and see that. If they lock the savings, man, I think it will be the best thing ever. Because I think they've come to the realization that a bigger problem is being created by allowing people to draw money from the savings than what they anticipated. I think now that the figures have been run, they see how much money people have already drawn, I think they realized that it was actually a big mistake. My personal opinion, our wonderful government officials and SARS will not agree with me because they will never agree that they've made any mistakes. But if they lock the savings, I'll be the biggest supporter of that and say, yes, do that. Don't allow people to draw money anymore. It will be fantastic. Let's see who's next here. http.gurshi, jy het nou nie geld nie. Ek weet nie waarvan jy praat nie, http.gurshi. Sorry. Give me a bit more, brother. Give me a bit more. Give me something to work with. Tar Imsu. Hi, I got 300. Is it 300? Yeah, it looks like it. 300,000 Rand in capital gains, and Saul says I must pay 50,900 Rand. It's very possible. Absolutely. And the reason why it's very possible is, remember that if you have a capital gain on this year's, on the new tax brackets and everything that's come out now in March 2026 after the budget speech, the first 50,000 Rand of your gain, okay, is a rebate. You don't have to pay tax on it. So you are left with 250,000 Rand. And then they work on a formula which talks about an inclusion rate, and it talks about your marginal tax rate, etc. And according to that thing, they do a calculation. Now, if you take 50,000 off your 300,000, you're left with 250,000 on which you're going to have to pay tax. And if we look at this quickly, it comes to 20% of the 200,000. On 300,000, it's less than that. Let's have a quick look, see if my maths is good enough tonight. 50,900 divided by 300,123 equals. That means that you're going to pay an effective tax rate of about 17% on your 300,000. So you are most probably in a 31 or 36% tax bracket, but that's the effective tax that you pay. And that is what happens with capital gains. You pay the capital gains tax when it's due. So yes, I know it's not nice to hear, but it is correct what Saul says that you must pay. Sorry, folks. I need to try and multitask here. Colin Naidu has joined and Christine has joined. Mr. ME Electrical Maintenance. Okay. Frakes SA. Hi, Cornelia. How could the conflict war between SA and Iran impact on the retirement savings? Okay. So how it impacts on the retirement savings, especially if you are a South African citizen at the moment, okay? The funds that are invested specifically in global funds, okay? You would have seen that the dollar has weakened against the rand. So the rand used to be running around 20 rand to the dollar. Now it's about 16 rand 30 to the dollar. So basically what happens is that portion of your pension fund money that is invested in global equities and which is part of an asset swap, because those share prices has basically leveled, okay, but the rand has strengthened against the dollar. Because the rand strengthens, the value decreases. So that's what is going to happen, or what should happen over the short term, is that you will see that depending on how much of your funds is in those global equity funds, you will actually see that the value of your pension fund money will reduce a bit. And that is on the short term, okay? That's on the short term. So if you have to retire now, if you are one of those people that have to retire, I would say from about a month or 2 months ago, and for the next 2 or 3 months, then you could potentially see that the capital value of your pension fund has either remained flat for the last few months or has taken a little bit of a decline. But if you are not one of those people that have to take your pension funds, then you're just riding it out. The same as what we tell people that will happen in all investments, because all investments does that, up and down, up and down, up and down. You just ride it out and it will recover into the future, and your retirement savings will recover whatever short-term losses there are now. So the impact that we have is that some markets are actually having a bit of a decline, but markets will recover in the long run. So basically, yeah, if you do not have to retire within the next few months, then don't worry about it. Then just don't worry about the impact of what is happening between USA and Iran at the moment. Okay, King M says GPF is not attractive. It's not based on investment performance but on salary and years of service. And King M, that is exactly why the GPF is attractive. Okay, you go and look at the formula that they use and how they calculate the value of your GPF when you get to retirement. And I promise you, if you take the funds that you get as per the formula, the 1/3 that you're going to get in cash, as well as the monthly income that you're going to get, okay, I promise you that if you were contributing exactly the same as to a different pension fund, as what you are contributing to a GPF fund, the other pension fund would, number one, not be able to give you the amount of capital that the GPF gives you. That will say won't give you the same 1/3. Number two, it will not, the capital, give you an income in a life or living annuity that is better than GPF. Trust me, we've run those figures hundreds, if not thousands of times. The GPF guaranteed income is better and more than what you will get in a private fund. And thirdly, because you are with the GPF and you've got your benefits such as funeral benefits, life cover for 5 years, medical aid benefits, which if you go and convert that into rand value and you say, listen, yeah, if I did not pay this to a medical aid and got on my salary, I would have gotten so much extra. If you take those three factors into consideration, the GPF is not only attractive, it is sexy. It is really a good fund. I don't think the GPF members realize how good a fund they are invested in. I don't care what you guys say. about I can't take all my money and this, that, and the other. You guys have got a brilliant pension fund. If you know what's good for you, hang on to it. Okay, anyway guys, that's it. Me off my soapbox with immediate effect. King M, GPF limits benefits of high market returns. What is your view? GPF limits benefits? No. King M, once again, I'm going to come back to this. I'm going to tell you that the benefits you get on the GPF is going to be substantially better than what you're going to get in a private pension fund. It is just like that. Because remember, the one thing that we have to remember with regards to private pension funds, okay, no matter what anybody says, private pension funds are unfortunately limited in terms of how much equity you can buy. You can only have 75% shares in a pension fund. Now, I love retirement annuities. Even though I know that you cannot expect to get much more than a 9 or 10% and in extreme cases 11% return on a private pension fund. Because of the equity limit that there is, because of the fact that the shares are limited to 75%. If you had 100% exposure to shares, then you could potentially get 12, 13, 14% growth. But because only 75%, you're going to get 9, 10, 11% growth. So you're never going to get the same growth in a Regulation 28 fund that you will get in a 100% aggressive share fund. You will not. I love retirement annuities, taking that into consideration, but also knowing about the tax benefits that goes with it. You add those two, then it's one of the best things. So no, GPF does not limit the benefits. You will not, even if you were invested in a private pension fund or provident fund, you will not get the same great benefits at retirement that you get in the GPF. So that's my view, King M. Let's see what's next. How's you? I'm fine, thank you very much. Mshana Wangapela, you say how to contact you. Okay, I'll give my WhatsApp number. Okay, I'll pop my WhatsApp number in here. I get this every Thursday and I keep on forgetting to write the thing down so that I can tell people what my WhatsApp number is. Okay, hang on a second, let's see. Okay, to contact me is 060. Let's see. 060 541 4685. And that is my WhatsApp number. And there we go. I've just popped it into the chat. So you can go and check it out. Okay, let's see what's next here. Sorry folks, I'm just scrolling through. It's jumped back to another place. Okay, I've given you my contact details. Hey Rowan, how's it but? I cannot wait for your live to start tonight at 7 o'clock. Oh yeah, what's that gentleman that I just answered? Rowan. King M, please go and search Rowan Carolus now. Go and search Rowan Carolus. Rowan Carolus is one of my advisors and he absolutely specializes in GPF. He knows more about GPF than what I know about GPF, I promise you. Go and find Rowan Carolus now on TikTok, and what you then do is you wait until 7 o'clock and then you join his TikTok live tonight, because what Rowan is doing tonight is he's doing a webinar on GPF and the benefits and everything. And I think you will be able to ask some more questions there and get his contact details. And Rowan is really, he can tell you stuff about GPF that I most probably can't even tell you. Let's see who's next here. Here we go. Pete, I was looking for yours because it disappeared for a second. Pete says, I'm 55 and I put my money in a preservation fund. How long must it stay there? Pete, the fact of the matter is that if you're 55, you can start withdrawing it. Because remember, Preservation fund is like I said, you must basically see it as the pension or provident fund that you had with your previous company. All you've done is you've taken that same pension or provident fund from the company and you just put it somewhere else until retirement. And what does our law says? Our law says that you can retire from the age of 55. So as you are 55, you can exercise the option now to take 1/3 in cash or a portion in cash and put the rest into a living or a life annuity. So that's it. There's no, it's only if you're younger than 55, okay? Only if you're younger than 55, then you must leave it in the preservation fund until 55. That's the youngest age you can take it. But from 55 on, you can take it anytime. Marius Price says, hallo sal dit wys wees om beleggings te maak met die rentekoers wat opgaan ensovoorts. Potch groete. Lekker man, ek het lekker in Potch gebly vir 'n jaar wat. Marius, ja, dit is goed om te blem met rentekoers wat opgaan. Ek gaan nou oorslaan na Engels toe. It is good to stay in or to make investments even though interest rates are going up. As a matter of fact, when interest rates goes up, okay, then normally growth rates goes up as well. Because it means inflation is going up. If inflation is going up, it means that share price is going up. If share price is going up, it means that you're getting more growth. So absolutely. We always talk about the fact that you should always be investing every month. For this plain and simple reason, I'm going to try and explain it as simple as possible. Let's say you invest R1,000 a month, okay? And they in an investment, they normally don't say, listen here, we buy a Sasol share and a this and a this and whatever. They put everything together and they call it units. And they say, when you put in your R1,000, you buy units. So, if you buy with R1,000, 1,000 units, R1 per unit this month. Next month, if you buy again, then the unit price has gone up and the units is not costing R1 anymore, it's costing R2. Now you only get 500 units. And the month after that, it's changed around and the units is not R1, it's 50 cents. Now you get 2,000 units. So you buy some units high and some units low, but that thing balances itself out over the time and you get that wonderful compounding growth effect. And it is much better to do that and to keep on investing right through good times, bad times, any type of times, than to try and time the market. Because if you are something like this, then it says to me that you want to see if you can time the market and wait until the market is low enough and then buy. Don't do that. Just invest always, whenever you can, whatever you can, do it. Okay. Pete says, what is the best, the RA or living annuity? Okay, so Pete, you've got your wires a bit crossed, mate. RA is a retirement annuity, and a retirement annuity is similar to your pension and provident fund, which means that you actually contribute, you save money in a retirement annuity until the day that you want to go on pension. Okay, so it is the investment product that you put your money in where it must grow to retirement. Your living annuity is when you get to retirement, okay, and you now are going to start taking an income. Then you buy a living annuity. So the living annuity is where you take all that capital and you say, I'm going to take this type of product, I'm going to choose an income that I want, and I'm going to take an income of 5% or 6% or 7%. So it's two different things. Retirement annuity before retirement, living annuity after retirement. I think what you wanted to ask, what's best is, what is the best, a living annuity or life annuity? Because when you go into retirement, you get the choice of taking a living annuity where you choose a percentage income, and that percentage, depending on how big the percentage is, if it is too big, your capital will start coming down because you're drawing your capital. If it's smaller than the actual growth rate, your capital will keep growing and you will always have capital. That's a living annuity. You play against the portfolios in the market that you've chosen. A guaranteed annuity is where you choose a specific guarantee, single life, joint life, a specific term, and they tell you, okay, based on what you want, we will give you X amount of income for the rest of your life. No ifs or buts, no markets, no nothing. We guarantee this income for always. And I think that's what you're on about. Rather the difference between a living annuity and life annuity. And the short answer is I can't tell you which is the best for you. The reason why I can't tell you which is the best for you is because I don't know you. I don't know who you as a person are. I don't know what your financial needs is. I don't know how much income you need. I don't know what your capital situation is. I don't know if the capital is enough to buy the income that you want. And this is for this reason that I always say that I would have to have a financial consultation with somebody. I would have to have a meeting with them to get all this information. And then once I've got all this information and I understand what you want into the future, only then can I work out a plan and put together a plan and then come to you and say, okay, Pete, based on your personal circumstances, the fact that you need to leave money for your wife, the fact that you don't have enough, this, that, and the other, my recommendation is that you take a life annuity or a living annuity. There is not a best between a life and a living annuity. There is no such thing as the best. The product that is most suitable for you is the best for you. But in terms of comparing them and saying this one's better than that, cannot do that. Because it's two different products that caters for two different types of clients. Unfortunately, a lot of financial advisors don't understand that fact. And because they don't understand that fact, they just do one of the two always. And then sometimes it's to the detriment of clients. So speak to somebody that really understands this and can do a proper planning session for you and then can make proper recommendations before you decide where you're going to invest your money, okay? Okay, is it necessary to declare income to SARS even if my monthly income is $8,250 per month, 99,000 threshold? Well, as far as I'm concerned, I don't think it's necessary, but I think you should. And the reason why I say you should is because the legislation says that we must all do tax returns on a yearly basis. If we earn an income, we must do a tax return. Now, if you're going to do a tax return every year, and you're going to do it via e-filing, you're going to do a 0% tax return. Because you're going to put in this income and explain, well, that's what I earn, and e-filing is automatically going to say, okay, great, you don't owe us anything because of your income. So, yes, I would say do that. You're not going to pay tax in any case. It's going to take you, what, half an hour? I don't even know how long it takes to do e-filing, to submit your tax returns, and you know that everything is done. Because if you don't do it, okay, if you don't do it, and somewhere in the future, you don't earn 8,000 Rand a month anymore, but you earn 80,000 Rand a month, and now you are in a 41% tax bracket. Now you start doing tax returns. Then SARS is going to come back and say, hey, you started doing tax returns now. What about the last 10, 15 years that you did not that you did not do tax returns? Why did you not do it? And then you're going to have to be able to prove to SARS, well, it's because I never had enough money. I never did it because I was never going to pay you tax. And you know what? SARS is very likely to say, oh, well, we're going to penalize you. We're going to give you a fine because you did not do your tax returns. Irrespective whether you were going to pay us money or owe us money or not, we are going to fine you. So, Joey, personal opinion, just do the tax return. It's in your best interest. Okay? It's in your best interest. True says, as die markte afgaan, is dit nie die beste om dit in 'n preservation fund te plaas en later pensioen. True, I'm not sure what you're on about. If the markets go down, is it not better to put it in a preservation fund and later in a pension fund? No. You see, True, the thing is that people that want to do this, people that want to take money from here and put it there because they want to protect it, because the markets are going down or something like that, that's people that tries to time the market. So just think of it like this. Let's say the market stands on 1,000 points. Let's call it points. Market stands on 1,000 points. Now the market starts going down. goes to 990, 980, 970, 960, 950, 940, 930. At what point do you take the money out because you were on 1,000 points and because it's going down, you have less and less new investment? At what point do you take it out and put it into a preservation fund or a place where it's safe? Okay, so let's say you have now done it. Whether you've timed the market well or you haven't timed the market well, market bottoms out on 500 points. And now you're sitting in that safe haven and you're just so happy that you moved your money when it went down to 900 points and you're like, okay, I just lost 10% and then I moved, but at least I didn't lose the other 40% because it's now on 500. Now the market starts turning around. Now the market goes to 510, 520, 530, 550, 560. When do you put the money back? And how do you know that's the right time? Because the market could go from 500 points to 550 points, and then the day after that it goes back to 500 points or 450 points. See, that's the thing. Nobody has that crystal ball to time the market. And this is what we've seen, and there has been numerous studies. I mean, really numerous studies. Every year there's a new study that proves it again. People that try and time the market, okay, are always worse off. They always have much worse returns on their investments than people that just stays in the market. So what it means is, if you invest for 20 years and you started investing on the 1st of January 2000 until today, you will be better off than the person that started investing on the 1st of January 2000 until today, but every time they thought the market was going down, they pulled their money out, and every time they thought the money was going in, they put their money back in. It has been proven that people that do that, okay, try and time the market, is sometimes as much as 40 or 50% worse off than the person that just invested their money and left it there. The last study I saw showed exactly this thing, and it showed a return over a 25-year period. And in that 25-year period, what I said is that the people trying to time the market missed out on 18 of the best trading days. 18, 1/8 of the best trading days over a 25-year period. 18, just think about it, 18 days in 25 years. When they say that, what they mean is that was the days when the market went in one day, just rocketed up. And those people, because they tried to time the market, they missed 18 of these days. But by missing 18 days in 25 years, they were 40% worse off. Their investment did 40% worse than the person that just invested and left their money there. So true, I can only say that anybody that tries to time the market, I do not think it's a good idea. I have just seen it too often. People just burn their fingers when they do. Okay, true. Thank you very much for the question. I've been wanting to answer that for a long time. I keep on forgetting. Hey, and here's Rowan. Thanks, Rowan. I am enjoying it. And I hope that that other gentleman goes on to your live tonight later on. Pete says, thank you, Pete. It's a pleasure, but anytime. Eugene O'Neill says, hi, Corona. How do you work out what your annual contribution to retirement annuity is, or what is the limit? Okay, so Eugene, basically what you do is you take your gross income, okay? So gross income is the income before tax. Okay, so let's say, and just to make things very simple and easy, let's say that your gross income is 10,000 Rand per month. Then the law says you can contribute as much as 27.5% of your 10,000 Rand to pension funds, to retirement annuities, pension funds, and preservation funds. So if you earn that 10,000 Rand, 27.5% of that is 2,750. That's what you can put in to your retirement annuity on a yearly basis. Then the law just goes further and it says, okay, we limit you, if you're going to put in that amount of money, we limit you to that 27.5%, because that's the only tax rebate we will give you is on that amount of money. and a maximum of 430,000 Rand contributions per year. So let's say that you are sitting in an income class where you earn 2 million Rand per year, which means that if you contribute 27.5%, you can invest 540,000 Rand to get to 27.5%. They say we'll allow you to do that, but we will only give you 430,000 of your 540,000 Rand as a tax deductible on your tax returns. And then it just goes further to say that although these limitations are built in terms of your actual tax returns, if you have contributed more, we will just roll it over, and whatever you can't deduct on a yearly basis at retirement, when you get your 550,000, whatever you couldn't deduct over the years, we will add on to that. So if you've got 550,000 that I can withdraw at retirement, but there's a further 500,000 that I couldn't deduct during my lifetime, I can add it together, and now I can draw out of my 1/3, 1,050,000 Rand as a tax-free amount. And that is basically how the retirement contributions work. How you work out what your contribution is, well, that basically depends on yourself and your employer. And you just take the amount, if it's on your pay sheet, plus what your employer is contributing, you divide it by your gross income, and it gives you a percentage. Gina, I hope I've answered your question. I've tried to answer it into two sides in the hope that I've given you everything. Okay. Ek het nou geoplees, hulle praat van die treasury gee access to your lock savings. Oh my goodness gracious, Brett, that is terrible. That is very bad news. Because that sounds to me that what they're saying is, remember on the two-pot system, they said when September 2024 rolled around, they said, we will allow you to draw 30,000 Rand of your savings if you had that amount. The rest of your savings you can't touch. That's part of your vested pot and you can't touch it. Now, if they say Treasury are talking about access to the lock savings, it basically means that they're saying, okay, that 30,000 Rand limit that was there, we're taking it away and you can now get access to everything. I really hope and pray this is not true, because, oh man, this is going to be a disaster. So let's hope that what you read up on is fake news. I swear, let's hope it's fake news. PG says, if my lump sum is 621,000, how much is the tax? Okay, so if we assume that you have never taken anything else, it means that you've got 600, where is it again? 621. You've got 621,000 Rand. The first 550,000 Rand is tax-free. The other 71,000 is taxed at 18%. So you are going to pay tax of 12,780 Rand. Okay, that's what you're going to pay, 12,780 Rand. That is if you have never taken any other lump sums from any other pension fund monies, PG. Okay, there we go. Shamaine Mika says, Sasol is doing well now. Just put the small money in on 30th and it's doubled my main ones are at Old Mitchell. Yes, Charmaine, and Sasol will be doing well at the moment because of the oil price, because of what's happening. This is the one, this war has dumped the whole world in the energy crisis. And over and above the fact, and because it's dumped it in the energy crisis, the price of oil is going to skyrocket. Because everybody wants it, but nobody can get it. So on the short term, yes, I'm not surprised if Sasol is doing well. But once again, you have to have the bravery to do something like this, to go and buy shares and to pick the right shares. And it sounds like you picked the right shares, Charmaine, so congratulations. Now the question will be, once this whole thing turns around, if you will be able to sell at the right time. Okay, Charmaine, congratulations. Rose D says, thank you for referring me to the accountant, very helpful. Oh, good. I'm going to have to contact Nico and tell him that I'm happy with him. He better be helping you, because otherwise he's going to have problems with me. Just joking. Okay. Spelle Duta. Is it true that South African tax is among the highest in the world? We got double taxation. I don't know. I don't really care. We all have to pay tax. That's my personal opinion. And there's ways and means by which we can lower our taxes and make sure that we don't pay too much tax. If everybody just wants to do a bit of education in their own capacity. Yes, I think we pay high taxes, but I don't know if South Africa is amongst the highest in the world. I honestly don't know. I'm not going to lie to you. But what I do know is that there are other countries in the world that one would not think is taxed as high or even higher than South Africa, and they are. In America, some of the states in America, the taxes are ridiculous. Just ask people that's been to America. So yes, it is very possible that we've got one of the highest taxes in the world, but once again, so what? You can't do anything about it. So do what you can, and what you can do with regards to it is go and plan your own investments and income according to that. Make use of the benefits that's offered in certain investments, and basically reduce your own tax rate by good planning. Okay. Ngwani, a pleasure. Ngwani, if I've gotten that right and I've only helped one person tonight with that, then it's fantastic. Vishnu says, hello, please can you tell me where is the best to invest in? Preservation fund. Vishnu, have you ever heard that comment about how long is a piece of string? When you ask me something like where's the best to invest in a preservation fund, I'm going to have to tell you exactly the same. I prefer to make use of Old Mutual products. I'm going to be very honest. I prefer their products. I think their cost base is low. I think their portfolios is good. So that's normally what I would recommend to people. But it's not to say that they're always the best. And I've seen some investments from Sanlam and 10X and Alan Gray that has done phenomenally. So at the end of the day, when it comes to investing, the best place to invest is the place that you trust. That is my opinion. If I recommend something to a client and I say to them, listen here, I think you must invest with Old Mutual, and they say, no, I don't like Old Mutual. They feel that Old Mutual has done something bad to a family member, whatever the case might be, and they just don't want to, then no problem. Which company would you prefer? Which company do you feel comfortable with? And people normally have a company. People normally have heard about Alan Gray or Investec or Sanlam, and because they've heard a lot, they've kind of built up trust in that company. Then that will be the best place for you to go and invest your money, because you trust them. So that's all I can tell you, Vishnu. It very much depends on yourself. Some people I speak to, they don't have any company that they trust or that they specifically want to go out with. And then they say to me, which company do you prefer? And then I show them the figures and I show them why I prefer using Old Mutual, and then they accept my word and they trust the company because they trust me. So, Vishnu, you're going to have to make that decision kind of on your own or follow the lead of your financial advisor, okay? Papa Tso, I will be withdrawing my RA this year at 55. Is there any monthly grant which I'm going to get? I don't know, Papa Tso. If you're talking about a government grant, I honestly don't know, because I don't know what the pension is that you're going to be earning. Because government grants works in, the SASSA grants, for example, works in levels. Some people get the full SASSA grant, other people get smaller SASSA grants depending on what they have in their own capacity in terms of investments and getting an income from their investments. So it's really going to depend on what your personal circumstances look like. But if you're going to be drawing money from your retirement annuity, then surely you're going to get a monthly income and you should not need a grant. I hope really that you get enough from your own RA that you don't have to get a grant. It's a pleasure, Eugene, absolute pleasure. Do I understand you correct that you your tax rebate is also 27%. No, 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 no. No, Eugene. So the 27.5% is to determine how much you can contribute to a retirement annuity, what the maximum is that you can contribute for tax rebate purposes. So let's say you contribute, your 27.5% that you're going to contribute is going to amount to 100,000 Rand per year. Let's say that's what it's going to be. Then when it comes to your tax return, it depends on what your marginal tax rate is, what you're going to get back. So if you are on a marginal tax rate of 21%, you will get back 21,000 of your 100,000. But if you're on a marginal tax rate of 45%, you get back 45,000 of your 100,000. So your marginal tax rate determines what the rebate is that you get on your contributions. And your contributions is limited to 27.5%. Okay, I hope that helps you, Eugene. I hope that's a bit clearer. Thank you, Aviator. I have been doing this for a long time. I trust that it's good advice. Pleasure, Vishnu. Anytime, mate. Pleasure. Aviator says, thanks. What will the tax be on 1.9 million? Aviator, I would assume that you are talking about 1.9 million as a 1/3. Now, I'm going to have to be very honest with you. I did not bring my little tax booklet with me tonight, and therefore I cannot tell you with any certainty, because I normally just have a squiz in there. So 1900,123 minus 1055,123. I think this is right. Times 36% plus 293. I can't say for certain, okay? But if memory serves me right, and I've done the calculation right now, then on 1.9 million as a 1/3 withdrawal portion, your tax is going to be about 550,000 to 600,000 Rand. So approximately 20% of that, 25% of the 1.9 million. But once again, I'm talking under correction. I don't have my little bookie, my little cheat sheet. So I can't tell you with 100% certainty, okay? I think for... Looks like I've actually gotten through everybody tonight. GC, this is the first time I think ever that I didn't have to rush in the last 5 minutes to get to everybody. There's a few more questions coming in, but at least it seems like I'm going to be finishing off the evening without having to get short answers. Seven says, I deposited 100,000 Rand to my RA on top of 20 grand. How much will be due to be in tax? Okay, so Seven, first question, is that 20,000 Rand the once off, or is it 20,000 Rand per month? Because if it's 20,000 per month, it means that you've contributed 240,000 plus 100,000. So you've contributed 340,000 Rand to your retirement annuity. That's the first thing. Second thing is then, what is your personal income? Because I can only tell you what tax is due to you based on your personal marginal tax rate. Like I just said, if you are on a 45% tax bracket, so let's assume it was 20,000 Rand per month, so it is 340,000 that you've contributed. So if you're on a 45% tax bracket, you're going to get 153,000 Rand back. If you are on a 26% tax bracket, as an argument, you're going to get 88,400 Rand back. So it's all going to depend, Seven, on the actual total amount that you've contributed and then your personal tax rate. And just remember one thing. Let's say, Seven, for a second, that you only earn 20,000 Rand per month, but in some way or another you've managed to save this 340,000 Rand. Then even though you have contributed 340,000 Rand to your tax, to your retirement annuity, because your total income for the year is 240,000 Rand, only 66,000 of the 340,000 Rand will be allowed to be will be allowed to be used for the tax deduction. And the rest of the money, the almost 280,000 Rand, will then roll over to the next year where you can deduct again if the same, or it will roll over to the actual retirement. So 7, I need a little bit more information before I can give you the right answer, but I think you've got the idea now. Hopefully that little explanation will give you guidance, but you're welcome to pop in more details and we can see if I can help you with a better or more accurate calculation. Primrose says, I'm scared to withdraw my 2-pot because of tax. Will that make a difference if I don't withdraw? Primrose, Primrose, that's all I keep on saying is don't withdraw, don't withdraw, don't withdraw, don't withdraw. So don't withdraw. If you're scared of withdrawing, I'm glad you're scared of drawing. As a matter of fact, I cannot emphasize this enough. Do not draw from your 2-pot system. Because if you draw from your 2-pot system, okay, first of all, you pay the tax on it. So let's say you draw 10,000 Rand and they tax you with 3,000 Rand. You only get 7,000 Rand out. That's the first problem. The second problem is that 10,000 Rand, if it stayed in your investment, you would have gotten growth on it. And next year, growth on growth and growth on growth and like that. And now you've lost out on all of that growth for the rest of your life. So it is the worst idea ever for anybody to draw money from the 2-pot system. So yes, it is going to make a major difference if you don't withdraw, because you're going to have so much more at retirement, and you need it at retirement. People do not understand how few people in South Africa can retire. 3.4% of South Africans can retire comfortably. The majority of people retiring in South Africa retire with way less money than what they actually need. So please don't withdraw. Yes, it's going to make a major difference in your life if you don't withdraw. Okay, Primrose. Oh, 7, you say you've accumulated 20,000. Okay, so you've got your 20, add on the 100, it's 120. Now you've got 120,000 Rand. Go see what your marginal tax rate is. Put that marginal tax rate in, calculate it, and you will see what you can get as a rebate. And then, like I said, just remember to take into consideration what your actual salary is to go and determine, because you take your actual gross salary, multiply that by 12, and then multiply it by 27.5% to see what you were allowed to contribute. And if this 120,000 Rand is now in line with that or more than that, so that you know anything more than that you can't withdraw. Okay. And just when I said I think I'm going to finish on time tonight. Morazvi, I'm 32 years old. I'm with MIPA Pension Fund. 254,000 per annum. Fantastic. Currently I have 130k in a Provident Fund. Great stuff. Okay, so Murazwi, it sounds like you're doing well, brother. Keep on keeping on. Keep on investing. Don't draw any money, okay? Very good. Vickers says, Kunai, what do you think about trading bots? Vickers, I think it's rubbish. Short and sweet. I have seen lots of these trading bots. I've sat with people who actually sells the stuff. I have yet to see one trading bot making money. I think it's a thing that on paper looks like it must work, but I've never seen any trading bots actually making money for people. I've only heard people losing money, so I think it's rubbish. Robin Sophia says, hello. Wait, hang on, what's happened here? Female, 27 years old. Just give me a second. I need to put the little thingy there. There we go. Female, 27 years old, currently have 60,000 in savings. I'm thinking about investing in a tax-free savings account. Great way to go, Robin Sophia. Because you're this young, if you start a tax-free investment now, it means that if you put in your 46,000 Rand per year, you will fill it up by the year that you're 38 years old. And if you then leave that until the day that you're 55 or 60 or 65, you have recreated one massive tax-free amount that you can use in retirement as income. And all the income that you will get will be tax-free. So go for it. Don't invest that full 60,000 Rand into tax-free, because you have to hold back a little bit for emergency fund. Okay. Cheese Cop says, hello, what's a good amount to retire? Cheese Cop, it depends from person to person. Some people are happy to retire with 5,000 Rand a month and they then need a few million. Some people want to retire with 150,000 Rand a month. They then need 60, 70 million. It depends from person to person. There is no right answer. It depends on you as an individual and what you want in retirement. Robin Spear says, currently only have life cover for parents. What to do, where to start? Robin Spear, I put in my WhatsApp number now. Maybe I should pop it in again. You send me a WhatsApp and we will gladly set up an appointment with you. And either myself or one of my advisors can give you a proper analysis and planning session and give you some advice. So my WhatsApp number is 060-541-4685. Contact me and we will set up the appointment and we'll help you with where to start and what to do. Okay. Primrose, when I retire at the age of 55, what is going to happen in all my pots? Don't worry about the pots. I keep on telling people, don't worry about the pots. You just worry about something technical, which is not really important. As long as you don't withdraw money, okay? As long as you don't withdraw money from the two-pot system, whatever you have at retirement, that big amount of money, it doesn't matter what is the savings pot and what's the retirement pot, what's the vested pot. All that happens at retirement, they say, you've got 3 pots, but actually the amount of money is this much. You've got 30 million Rand in retirement. You can now choose to take 1/3 in cash, 2/3 as monthly income. And that's what happens. So stop worrying about the pots. As long as you don't draw anything from your savings pot towards retirement, the pots doesn't matter. As long as you don't draw, the pots doesn't matter. So can I retire comfortably with 4 million Rand if I'm 38 years old? Well, Tarsu, if you're happy to retire with 3,000 Rand a month, I suppose you could. 2,000 Rand a month. Yeah, then you could. But no, I don't think anybody can retire comfortably with 4 million Rand unless you're happy to, I don't know, live on the bare minimum in life. Don't have a comfortable house. Eat the very basic foods. Yeah, I won't be happy to retire with 4 million Rand. And I definitely won't retire at the age of 38. That I think is absolutely ridiculous. What the hell are you going to do for the rest of your life? No, mate. Rethink this whole exercise. Okay, folks, we have now surpassed 7 o'clock. I'm going to answer the last few questions very quickly, and then I am going to have some supper and go to bed. Continuation of my question. Are my 3 pots combined and taxed at once? I've just explained it to you, Primrose. You get everything, one amount, 1/3 you can take in cash, other 2/3 gives you an income. Okay, that's all you need to know. Stop worrying about the pots. How much do I have to have my pension to earn 25,000 Rand? Just see, why do you ask these difficult questions when I'm about to go and have supper, eh? 300, 1, 2, 3, by come on. 1, 2, 3. 1, 2, 3. Equals. I would say that you need, if you want to have 25,000 Rand pension, you would need to have approximately 7 million Rand to have a comfortable retirement and not worry about money again. Bruno, no, I don't assist with taxes. I understand the tax laws and investments. That I tell people again about. But if you want taxes done, I will refer you to my accountant who does a lot of work with me. I'm 38. I want to retire with 2 million. How much should I put in RA? I honestly can't tell you, AJ, because I don't have my calculator with me at the moment. So send me the same question on the WhatsApp number and I'll go calculate it for you and I'll let you know. Dima, am I allowed to take everything that is invested? Oh, Dima, come on, man. Why do you people want to do this? I actually get angry when people want to do this. Yes, you can withdraw everything from your vested pot, but it's not a good idea because you're going to pay tax. Folks, I'm sorry to say, but you people that want to keep on drawing from the two pot and the vested pot and everything, you just upset me. Any case, to everybody else and you guys as well that want to draw money that's upsetting me, thank you very much for a good evening. I hope that the information that I have given you has been of value. I'm going to say good night. I'm going to have some supper and sleep. Please don't draw your pension fund monies. People don't have enough in South Africa as it is. Don't penalize yourself and take the little that you have. Okay, keep well. Bye-bye.